So we got dollar on the daily time frame. So I kind of have marked here these three highs going up into this volume imbalance, and then this rejection block, which in the order of precedence with the PD arrays and the PD array matrix, rejection blocks are just shy of old highs, so they play a big role here. And if you look how dollar gave up the goods, we have this high, low, ultimately up to this higher high right here for this rejection block. Then we see it displays past it. Then this last down close candle is going to be a breaker. So we have it on the daily. And then even inside of this, if it really retraces deeply, this could play a factor as well, as long as with this PD array had this buy side imbalance, sell side inefficiency, right? So we came up, blew past it, traded back up in it, took some more liquidity, took tons of buy side, that rejection block, and still gave up the goods. So now we're kind of looking at a bearish order flow. And we have this daily fair value gap that we're already trying to reprice into. So this could be, Monday. This could be that opening range low down here, that 104.83 level. Trade up, make the high of the week, either Tuesday, be that manipulation with news at 10, drive up there. And then ultimately with FOMC the next day, can shift it back down and ultimately kind of come down here and take this low. And then reach down into this daily fair value gap over here. Back in September, barely tapped it, hit consequent encroachment. We can see that taken. Even more so, I would like to see it come down into here, into this daily bullish breaker. Just because when you're aiming from one PD array, now we're looking lower to discount, we're going to want to aim for these PD arrays. So we have this fair value gap, which does have a higher level of precedence above a breaker. So we could definitely see this be a draw as a target, but if FOMC really pushes price, we could probably see it come down here to this breaker. So those are levels I like there. So bearish on the dollar. We can definitely see big figure 104. Yeah, just shy of big figure 104 on the dollar. Let's go to the yields. So the yields, the US 10-year yields follow along the same as the dollar. So the dollar's looking bearish. Most likely we can see the yields move in symmetry. The future contract is going to move in the inverse of the dollar, the yield. So if the yield's moving down, that futures contract is going to be moving up. So if the actual yield's going down, then that pricing is going to go up on that side. So we can see this. We have this a monthly fair value gap. Stab down into it. And ultimately probably see like a little deeper push down into it. But not too much, I would say. They have this low. We can drive maybe to consequent encroachment. This is very small volume imbalance on the weekly right there. And then ultimately for the rest of the year, or maybe not for the rest of the year, but for the intermediate period, kind of move lower. We have a breaker possibly forming. We traded past it. So on the weekly, we kind of just have to let it play out. Trades up into this candle. Possibly could move lower. This last down close candle, we trade up into it, so we kind of rejected off of it. If we can ultimately later on in the week just displace down this way, then I'll kind of put into some lower levels into play. And same, just like how we saw in the dollar. So Those are good things. All right, so now we're going to take a look at the indices, NQ in particular. I've really been like trading NQ. Really smooth, likes the manipulation. It's a fun ride, for sure. Definitely really, I like it. I like it more than ES. Really clean price action. So we're gonna go to the contract NQ. I like using this as like kind of like just a big picture, a real macro chart, and not using just each contract month because they're all the contracts and how they're playing out and whatnot. So I like having this is like my higher time frame, daily, weekly, monthly, and then I'll have a separate chart where it's NQ intraday, and then I'll transpose all those levels. But anyway, we see that we again took some liquidity on sell side liquidity to be exact, major from June 1st low, sell side, and then look at the reaction in price, right? If it wasn't a kind of a change in state of delivery where you can see like a reversal here, if we get above this high this week, possibly potentially, then we'll have a breaker in effect, and then there'll be this. We have this low right here, high, made a lower low, took this liquidity, took some more liquidity, and then ultimately reached down here, and then sprang up. Ultimately, from this high that we came from back here, this retracement, 2.5 to 2. I'm sorry, 2 to 2.5 standard deviations from the breaker. I use this last one right here, this low high, that lower low that took this liquidity in this major one as my projection. But you definitely could use this, and maybe for a larger projection. But I guess for me, going into the next quarter and early 2024, kind of my idea of what I'm looking for. But going down into this week, so we have this buy side over here, and then we have this low that we made down here. So I took that whole range, measured it out, and that's equilibrium, 50%. And look how we took this liquidity and immediately went into a slight premium. So this level I have transposed onto my lower time frame as a key level that we can maybe potentially see a reaction price, and we can take a look at it and how that works as well. So here we have it. I have it transposed onto my my 4-hour chart. So my daily levels transposed, and all the way down from weekly, monthly. I definitely have my weeklies, not necessarily my monthlies, but I'll have those levels like written down or like in my phone if I'm on the go or something. But my daily and weekly are going to be on my chart, and then my 4 hours, and then my intraday stuff is usually sometimes inside of these higher time frame levels. So, all right, so equilibrium of that daily range, that same level, is right here. We have this can be an order block. These last consecutive down close candles. Even this one right here, this one particularly, this is at the low end of this 4-hour fair value gap. We have Friday's low, that could be liquidity that's taken along with it. Now we can also see if this low goes to this high, comes down, takes this low, then we have an order blocks, fair value gap. Definitely a lot of potential there for a solid direction higher. But let me just kind of go back a little bit for context as to why I wanted higher prices after last week. People may think, but it definitely takes a change state in delivery. See, this high is broken, right? That's a classic market structure shift. All this displacement, speed, breaking up, all the way back to a very large range equilibrium. And taking some more liquidity with it, coming back to this is an old daily for value gap. So it's kind of important to keep some of those levels from the sell side of each curve and the buy side, especially even on the weekly as well. I kind of like make them gray so they're not as obvious, and they're kind of like helps me keep it clean. But I like to definitely make sure I keep them. And same thing my new week opening gaps too. I just created an object tree with them. So this level right here, 15,468 and 3/4. That is, if you go back to the daily, it's high right here. Right, so we can see that as a larger time frame breaker, potentially on a weekly. Let's take a look. Let's see. Yeah. On the weekly. Low, high. These two down close consecutive candles. These are order blocks. Your weekly, the body of the weekly order block is right above equilibrium. This entire range, which that's generally where the best order blocks are found, right near equilibrium. But it could maybe trade down a little bit into it, but I don't see it getting way down here necessarily. I'd mostly see it here and then moving higher. Especially this is a level on the weekly. I definitely, and like, look at this candle. No wicks, barely any wicks, pure speed all the way up through. So I definitely think we can see this. And we're just gonna go back through these old PD arrays. So when we're looking on the downside, we're just gonna go back up to these levels until we ultimately come back up here. And then these are a very old high fair value gap. I'm not trying to say that, but I'm kind of letting you know what I see. So, but yeah, definitely buy side on the indices here. So if we go back, dig into this, because now this level is where a weekly order block is. Take some liquidity for our 4-hour fair value gap and order blocks down here. Daily breaker right here. There's some strong structure supporting a buy side idea. So we may cool off tomorrow, or we may just do a really clean open, low, high, close buy day, and then maybe kind of move sideways in the afternoon, have a strong move in the morning, move sideways in the afternoon, and then get ready for FOMC. But we're just going to just watch, no actual button pressing during the FOMC. And then ultimately this week, I think we can, boom. Major highs, very clean highs. We had a really expansive week, but I think we keep going as a breaker. It has tons of speed through this high, at least. So low, high, there's speed through here at least. And then we can trade up into this imbalances, these old PD arrays that I kind of kept them on my chart. And kind of if we get a breaker inside of tomorrow's price action, projecting up to where, it'll be smart to take off some profits if we get this. Only if. So, but if not, we'll move accordingly. Like we could take this here. We can have like a failure swing because this is not as high, and have a failure swing. But since we didn't see a very clean opening range high, I mean, we did. We had a clean one to put in, but and we took some liquidity, so that's why I kind of like us drawing a little lower. And then really kind of really springing up here. Or if this low right here, there's an SMT down here where we take it here, but ES comes down and breaks this low. So if it's one of these, so say we're here at this low, but ES doesn't make or actually, probably, let me see this. We're trading down here, but NQ fails to make a lower low, and then it starts to move higher that way. But then from this low to this low, that's a and then say NQ did the opposite and it just swept this low and then started doing the same thing, that kind of confirms this accumulation. But I don't know if we're going to get that specific. That's just something that I would look for. Or if NQ did run down here, being the more manipulative, um, you know, price. This is a shitty rendition, but here we go. And then, yeah, NQ did that. But then while ES maybe didn't, or even if they did, that's still trendline liquidity. So, um, but yeah, something to look for. SMTs. So failure to make a lower low right now in this kind of scenario would be something huge, especially with big levels, order blocks. Yeah, absolutely. For me, at least, you can go opposite, and we'll see. But I don't know. Based on what I feel and what I took away, definitely think buy side this week. Putting a swift high here on Monday, drew up into some liquidity. Started to move lower here. We have, let's go to the 4-hour. We have tons of sell side that's been taken, similar to how we've seen on dollar. So let's go back to dollar really quick. So you see how this low's been taken, stabbed, and then finally dropped down. So these are multiple drives into a bullish conditions. And we're in a 2.5 to 2 retracement zone. That would be this level right here, 79.93. Kind of put the low of the week, similar to NQ and indices. And then we can draw up here. So, and then this is all like a very low liquidity run, low resistance. I mean, look how easy those highs are. Look how, like this, all these little sweeps of highs on the sell side, they're going to be targets on the buy side. So here we go. As we're going on this side now of the curve, right? We're going to come down here, possibly. I'm not going to definitely say it because I'm not as comfortable with oil yet, but some more money reversal down here into this daily breaker. Huge levels right here, daily breaker. PD array right there. And then move up and taking this whole buy side. And all these former highs right here, liquidity. Even if you wanted to kind of see where you're at with with a optimum trade entry. I don't necessarily use it, but it's kind of nice for like a reference. So that optimum trade entry was at 89 or 86, 89, just shy of 87, big figure, just call it 87. Right near consequent encroachment of this. This is a daily fair value gap. Liquidity, old fair value gap. They can draw from this candle's low, between this candle's high. If you did draw that back out, could be a draw. This level right here could be a draw, but that's a little beyond. But then it could just retrace, boom, and then keep going ultimately for this high back here, back over, was that 90? Almost 90. You should call it 90, big figure. Same for big figures. Then look how clean these highs are right here. Very clean. So I definitely think, excuse me, NQ and oil are definitely going to be on the up and up going into the year. It's pricey to Santa rally. So if we do see a Santa rally, you heard it here first. Definitely heard it here first. Same thing. Buy side way up here. Low. You see a smart money reversal down here to a weekly fair value gap. Reverse, breaking structure. Do we make our way back on it? make our way back up. Then if you want to do it on the daily time frame, optimal trade entry, use the bodies of the candles. Yeah. So what's that? That's just above. That's on the weekly too. What did I have here? I had 15. Oh, so optimum. Yeah, so optimum 17% is 15,380 flat. That's then this is that previous week high right there. Just have 79 fair value gap, 79 deep retracement with it being NQ. If you go to the dailies, just transpose it down. Yeah, perfect. Right into an old PD array. This old daily breaker. Now we're in a premium, more of a premium range. So, yeah, and then how this, I didn't really refine it onto it. I kept like the weekly levels kind of right there with those, and that's where most of the volume's at anyway. So that's fine. I'm fine with that. Don't got to be super precise to really know because I'm gonna have a rough idea, and it's gonna probably end up if we did go this way. I'll take parcels off right here at this body of this candle, so I'm not trying to reach for the absolute high of the day, and then ultimately it running back on me. So let's see. Is there anything else we missed? Oh, I meant to show you this as well when we were talking about the bearishness on DXY. DXY, or sorry, dollar index failed to make a higher high. Okay, before we get out of here, this is ES contract in orange and Q in blue. So if you were on, this is the daily, so you can't really see it, but the same SMT divergence that's in NQ was seen on indices. So from back here, right, they made a low that high. So as ES and NQ made a lower low, or even right to here, because then you see the divergence between NQ and ES, right? Because this low, it kept made a lower low. NQ then failed while dollar failed to make a higher high. So that means there's distribution, bearishness, selling in dollar, while we're seeing some accumulation, right? And NQ is the one who tipped it off. So that's how I really frame my trades, or frame my weeks, I would say. Not necessarily frame my trades, because that's going to go into like a live session. But, you know, just how I frame my bias kind of going into the week on a larger time frame to where I can be on side. I see these larger money kind of moves with SMT divergences and the liquidity and the displacement and the speed, and then you see something like this where the market tips its hand, where, you know, big money tips its hand, and then, you know, because this could be just a fake run on stops, boop, and then look at it, the reaction on a line chart. Failed to make a higher high, then just look, ran. Alrighty, if you liked the video, drop a like, drop a comment, subscribe. I plan on doing more of these more often, more frequently. And yeah, until next time, good luck, good trading.